Hey everyone, welcome back to Corporate Decoder, the place where we dissect corporate filings. Today we're diving into a report that involves name changes, a hunt for a business deal, and financial figures that might make you raise an eyebrow. Sounds interesting, right? This report is about Yale transaction finders, previously known as yacht finders. They're on the lookout for a business to merge with, but their financial situation is a bit rocky. We'll break down the key numbers and see what's really going on. Before we get started, if you like having corporate documents explained in a simple way, subscribe to the channel. Also, we have a Discord community. The link is in the description below. First, let's establish who we're talking about. This is Yale Transaction Finders, a company that used to be called Yacht Finders Inc. They officially changed their name sometime in the past, so if you were looking for yachts, now they're trying to find some transactions. This document is a quarterly report, also known as a Form 10Q, which all public companies have to submit to the Securities and Exchange Commission, or the SEC. Think of it as a checkup on how the business is doing every 3 months. We can see the commission file number here, which is like an ID for the company. Now let's get a bit of the background. The company was created a while ago in the year 2000, originally as Sneeush Corporation, then changing to Snohomish, then Yacht Finders, and finally Yale Transaction Finders in April of 2022. The name changes might sound confusing, but it is very important to know the name of the company. Here is what the company wants to do now. Back in 2007, they changed their business plan and are now on the lookout for another business to buy or merge with. They could buy assets, shares, or just merge with another company. Basically, they are a shell company, which means they don't really do anything except look for a business deal. Time to dive into the numbers. Let's start with the balance sheets. The amount of cash they have is only about $6,300 as of the end of March in 2025. This is down from about $11,220 at the end of the previous year, 2024. This shows the company is spending more money than it is making, leading to the cash decreasing. Total assets is also about $6,300. Now, let's look at the other side of the balance sheet. Accrued liabilities, which are short-term debts, are about $12,600. Up from about $9,700 at the end of 2024. This shows the company is relying more on short-term borrowing. They also have a note payable to a related party for about $118,500, which hasn't changed since the end of 2024. This is a loan from someone connected to the company. They owe about $11,400 in accrued interest to that related party, up from about $9,900 at the end of 2024. This means the interest on that loan is building up. Total liabilities are about $114,400, up from about $128,100 at the end of 2024. The liabilities are far greater than the assets. Total stockholders deficit is about negative $136,200, worse than the negative $127,000 at the end of 2024. This means the company owes more than it owns. On the balance sheet as of March of 2025, total liabilities and equity is $6,282. The other balance sheet as of end of 2024 was about $11,200. Now let's check out the income statement, which shows how profitable the company has been. Revenue is zero for both the first 3 months of 2025 and the first 3 months of 2024. This is not unexpected, as the company is currently trying to find a business deal. General and administrative expenses are about $7,700 for the first 3 months of 2025, slightly down from about $7,900 for the same period in 2024. Interest expense is about $1,500 for the first 3 months of 2025, up from about $900 for the same period in 2024. This is because interest has built up on the loan from the related party. Net loss is about $19,200 for the first 3 months of 2025, compared to about $8,800 for the same period in 2024. They are not doing well and losing money. Basic loss per share is $0, and also the weighted average number of common shares is about 5,200,000. Let's move on to the statement of changes in stockholders' deficit, which shows how the ownership of the company is changing. Balance at the beginning of 2025, so January 1st, total stockholders' equity was about negative $127,000. The net loss then was about $900,200, so the balance at the end of March in 2025 was negative $136,000. The balance is decreasing over time. The balance at the beginning of 2024 was negative $84,605. The net loss was about $80,800, making the total loss about $93,400. Now let's examine the cash flow statement. Net loss was about negative $9,225 versus negative $8,800 for the same time in 24. Increase in interest payable to a related party was about $1,500 versus about $900 in 2024. The increase in accounts payable was about $20,900 versus about $5,724. Net cash used in operating activities was about negative $4,900 versus about negative $2,224. Cash at the end of period was about $6,300 for March of 2025. Cash at the end of period was $429 in 2024. This section tells us about the company and how it presents its financial information. It also mentions that the financial statements may not include all the information typically found in annual reports. This section describes the important accounting rules the company follows. This is a very important section. It says there's substantial doubt about the company's ability to continue as a going concern. This means there's a risk the company might not be able to stay in business. They need working capital, like advances from shareholders, to meet their obligations and become profitable. If not, they might not be able to pay for all the expenses. This section talks about transactions with people or companies related to Yale transaction finders. They have loans and notes from related parties with outstanding amounts and accrued interest. This talks about events that happened after the date of the financial statements but before they were released. The company issued convertible promissory notes in early May of 2025. Now we are moving on to management analysis. It warns that actual results may be very different from what they expect. It lists things that might go wrong, such as economic problems, issues in the stock market, or regulations that hurt their potential deals. It says the company will need to raise additional funds or acquire a profitable company to pay its bills. Here, the company admits that their internal controls aren't effective. These are legal documents included for compliance acts. Now, let's put this all together. Yale Transaction Finders is a shell company looking for a deal, but it's burning through cash, accumulating debt, and has serious doubts about its ability to stay in business. Its hope is that a transaction can be completed. What do I think? Well, Yale Transaction Finders is in a tough spot, but not unexpected for this type of company. Their ability to find a suitable merger partner or acquisition target will be critical to their future. It's a risky situation. Alright, that's our breakdown of Yale Transaction Finder's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.